Hey guys, today's Saturday, the 13th of February, 2016, and I had to re-record this video because I was doing it on my other Surface Pro 4, and it crashed. Like, I don't know what happened there, so I have to kind of do this recording again, unfortunately. So all good. So yeah, we had a really interesting week. It was very volatile, right? And I'm sure a lot of people got caught out. So we started the week off really well. 2 or 3 days of gains, and then all of a sudden it just reversed completely. It's a bit disappointing, but I'll kind of explain to you what's going on. So this is the S&P 500, and we're looking at the daily chart. So you can see that we had this low put in January, and now we put in a new lower low. But we've been waiting for this rally to come, right? We've been waiting for a minor rally, some kind of a correction, and most of us would have thought that would have been about this level. But unfortunately, the market faked us out, and now it's starting to look to do the move that we kind of were expecting to see. And this is pretty important, right? Because and I'll explain to you. But I've been saying that I've been waiting for the market to move up again, right? At least in the short term. And the reason why I say that is because of three things, right? Firstly, just look at the technicals, right? The technicals tell us all. We were oversold, right? Significantly. We had a big drop here, and it's just natural to see a correction, right? This correction is okay, but it's kind of the first move of the correction. And I can't explain to you what I mean if I drill down into the 4 hour. So we started to get the correction, and all guns were blazing, and all of a sudden we just dropped off again. Now, most people would have, if they were looking to enter, they would have been looking at this area here, right, as a safe level of support to enter. We had the initial move from the lows up, and then it was followed by a retracement, which is normal, and then we had the up move, and then the expectation was a pullback, right, into support. We had a lot of good support here, right? You can see here that price got rejected. As soon as price went down, it got rejected, and the buyers came back in, pushed the price back up, and the same thing here, and then we dropped off again, and we had a bit of support up here, so we had kind of new support, I guess. And then finally, when we came back, the last bit of support got pretty much faked out, went up, and then all of a sudden, boom, went down below support, and then we've been down since. Now, this is kind of like a fake out, right? The market, the reason why is because the market, when I say the market, I mean institutions, the banks and the hedge funds, all those big players. Like, they know what the retail investors are thinking. They know what we're planning to do, right? They know that the majority of people are looking to enter here, which is nothing wrong with that. But the problem is once you get to here and then we break below it, people are either stopped out, or they close their positions because they think it's going to keep going down, or they hold on to it, and the ones that hold on to it will benefit, right? But in some cases, it might just keep going down further, and then you're in trouble. So the market knows this, and they're going to try and they will do this a lot more. You will start to see a lot more of this kind of volatile moves, right? Now the problem is, I had a strong feeling we would see price go down to this level here and then go back up. I have a reason for that, but my technicals tell me that we're looking to go up around here, right? So what do? I have a plan. My plan is to follow based on what it is and the technicals, and I have to follow my technicals, right? This is not part of my plan, right? This is something that's more of a gut feeling and through experience looking at charts a lot. So what I might do is I might update my plan to also say that I have to take note of price action and chart symmetry, right? So because as a potential decision point, right? I can use that as a decision to enter trades, right, or whatever. The reason why I say that is because if you look at these charts long enough, right, you'll start to notice that the markets move a certain way, right? They obviously go up and down, but there's specific periods of the year or day or session where the price behaves, at a certain way. If you look back into history, you look back in the past, you'll see that there's a lot of moves in the past that are pretty much almost identical to what you see now, right? And when we were trading around here, and I looked down, and everything was saying, yeah, pullback, slight pullback, then push up. But I had a feeling that we would see something go down, because there was just all this empty space here, and I just didn't like the look of it. I didn't feel comfortable that price goes up and then retrace it and we were off to the races. It wasn't going to be like that. It wasn't going to be that easy, you know. So I had a feeling we were going to go down, which we did. So it was a bit disappointing, but you know, I followed my plan, and you know, that's all I could do. So, and the third thing is options expiration week. So next week is the options expiration week. So what the market tends to do is they usually like to, they know that a lot of people will book puts, right, around these areas here. So people will be hoping that this is going to keep going down, right? The market knows this, and they're going to do everything they can to make those contracts worthless, those puts worthless. And by doing that, they push the market up, right? So people bought all these calls and these puts, hoping the market will go down, and it doesn't. It goes against them. And then their puts are either worthless or they're in a loss. So, and the markets like to do this. They like to screw the retail trader, screw the investor, right? The plebs like me and you. That's how it is, right? You just got to accept it. They do all these whippingness on purpose, right? To stop you people out, because they know our psychology. They know how everyone thinks, right? And if you think that's some conspiracy theory, it's really not. It's just that you're not in this world yet, so you don't understand. But that's what they do, right? So they're not working in your interest at all. Okay. So every time I come into trading, I don't think about trading to beat someone else or to make more money than someone else. No, I think about how I'm going to beat the market. Right? I don't like being taken as a fool. I've already been taken as a fool once back in the GFC 2008. Right? So I'm on my own mission to beat the market. That's what I want to do. And by beating the market, you have to be on their side. Okay. So what you have to anticipate their moves, right? Not your moves, right? Your opinions don't matter. Whether you think this goes up or down, or whether whatever the case may be, it does not matter, right? Your opinion doesn't matter. It's what they do that's important. And if you can anticipate what they're going to do, then you know you're building that edge for yourself, right? And that's all that matters. That's really all it's about. So with that in mind, what I expect to see is we'll probably have some kind of a pullback as well, a slight pullback here, and then we'll definitely see another move up. Now, naturally, resistance will be at the 1900, right? Psychological number, right? Naturally, it will be there. But once we cross that, if we do cross that, then we're looking at the 1955s, which is about here, which is an area where there was a lot of resistance before. And we've got the 200 moving average as well to keep an eye on, and the 50-day moving average there. So we most likely, what I expect to see is we'll probably go around these levels here before we might see a potential move down. Okay, but still early to tell. But probably starting from next week we'll start to see this rally. So hopefully all goes well there. So that's the SPX 500. Now, I just want to have a look at the economic calendar. I forgot to go through this before, but so next week we've got pretty busy week from the looks of it. Chinese trade balance, that's important for Australia, right? So a lot of medium events, which is important. So you've got New Zealand retail sales, which is going to be important as well. The RBA meeting minutes, so this is going to be another important one for Aussies. To see what the outcome of the meetings was. Gives you indications in terms of what they plan to do, what they think the health of the economy is. Most of it's all bullshit, really, but you still have to take note of it. Foreign and direct investment, that'll be important as well. So I think there'll be a lot of moves in the currency markets. So Aussie investors will be looking at the Aussie dollar. Pound, GDP, the UK will be a lot of news coming out of the UK. This will be interesting, actually, a 10-year bond auction. Something to keep an eye on. I'm not going to comment much on it now, but something to probably just keep an eye on there. ECB non-poetry, the ECB meeting, it's always the same stuff, but still important to keep a note of. And you've got your US data, housing stats, building permits. Now, they're going to obviously come out there and they're going to say what they need to say to calm the markets, right? So, again, all this stuff is all bullshit, right? It's all jargon. It's all it's just what they call the phony jobs report, all that stuff, right? None of this is real, right? They just make up the numbers on the day and then just send it out, and the markets react, right? I don't really care about these numbers at all. The only thing I care about is the reaction afterwards, right? So I don't care if the employment numbers tell me that employment's down to 0% or 10%. I don't really care. I just care about how the market reacts. That's all. What else is there? So up until Thursday, we've got a lot of important AUD news. We've got employment data, again, phony jobs report, full-time, part-time. This is all bullshit, right? They're going to come out and probably say they might come up with a bad number, right? They do this on purpose. They'll come out with a bad number just to even the playing field, right? Because if you start putting, employment's been rising month after month after month, no one's going to believe that, right? No one's going to believe that, and they're going to start to ask questions, right? And they don't want that. So they need to maintain this balance where there's enough data that makes it look real, right? But the truth is, we know this is all bullshit. We know we're heading into a recession, or we might already be in one. Again, China data as well, so it's going to affect the Aussie. And then Friday, we've got CAD data. So no major announcements, but a lot of very important ones throughout the whole week anyway. So it's going to be a busy week of trading. So yeah. Alright, so that's the SPX. So let's have a look at the ASX200 quickly. So yeah, we've been hovering around this level here. We've just been basically trading in a range, basically, right? So that's really all it is. So if you look at it here, you can mark the ranges as so, right? This is where the support is. That's the resistance. Pretty obvious, right? So now that we're kind of going back down, we've kind of created this. So we had the initial lower low, right? You got to really zoom into this because you think that it might be level, so you think it might be a double top, but really it's a double bottom. But this is actually down, so this is a lower low, right? Because I pointed this out a while ago, last month, and someone said, no, it's double bottom, and I said, no, zoom into it properly, right? This is done on purpose, right? This is not accident, right? How they close the market. I'll show you what I mean by this one. So if you draw a line from the low here. Right, I'm doing my best here. Look at that. That's nowhere near it, right? That's clearly closed below. Now, if I check the candle at the top there, you've got to close at 4,798, right? If I check the candle here, 4,793, so 5 points below, right? That's signal to me that we're going to see some more downside continuation, right? Right, and it doesn't do it straight away. What the market has to ebb and flow. So what it does is when it creates the low, then it goes back up and then retraces and then goes back down. So you know that it's going to go up, and there's a high likely chance that it's not going to go above this level, right? But it's going to have to top out around here and then reverse, which it's done. It's reversed and it's gone back down, and now we've put in a new lower low. So that's again signaling another move to the downside, right? But first, we will need to see a rally. So what I expect to see, right? This is what I expect to see. So we've got new structure, lower low, right? And then lower high. And then we've got a lower low, right? Now if because we know, we have an understanding of how to read price, how to read it, whether the market's bullish or bearish, or whether it's in trend, right? With that in mind, you know that the market is going to move up as it has, and because you've got a lower high here, you know that the market is likely to top out below this level, right? And if it is the case, then we're going to look at a reversal back down for a new lower low. We've got a 50-day moving average here, which provides some level of resistance, but there's always the possibility that the market could keep going up. It could just break through that level, right? If it breaks through that level and closes above that level on the daily, right, then you'll know that, okay, this looks like a trend change. Get out of the trade, right? Whereas most people won't see this, right? They won't see this until the actual until it just keeps going, right? That's okay. You you'll need to be prepared to lose some money, right? In the hope that you're going to get out earlier or switch to the correct position. Whereas most people would wait, just keep going all the way up here, and then they still haven't decided. And then they decide that, okay, well, maybe the market is going up, right? So that's a useful tip there. But for now, it looks like more downside. So looking for, so that's that. All right, so that's it with the stock market. Let's go to the current Aussie dollar, because there's going to be a bit of movement this week, I think. So looking at the daily, we're still trading we're still in bearish consolidation, right? So as far as I'm concerned, this still looks like there's going to be a move down. It's just a matter of when it's going to be, okay? But we're definitely in this channel here, and if I go to the 4 hour, you've got a bearish Gartley pattern and a bullish Gartley pattern, right? And I'll just get rid of all this stuff here. So what I expect to see is, now we know that the US dollar is weak at the moment, right? Which is driving up our move lately. And that's mainly because of some central bank talk about how they're looking at potentially not raising interest rates further, and maybe even looking to cut, okay, into negative like Japan. That's the rumor at the moment, and that is possible, right? Now, if you remember a video I posted last year, I said that the Aussie dollar is going down, but wait till about March or April. I think we're going to start to see the Aussie dollar reverse and become very bullish again, right? And the US dollar being weak. It's just a theory based on what I've seen. And we're kind of in February now, midway through February. And I expect to see, I'm not saying we're in a bull market now, I'm just saying that get ready for looking for potential opportunities to enter the market, right? There's an opportunity, so we just have to wait and see what happens, but this is what I expect will play out in the next week or so, right? So I expect the market to go down and to some levels of support here before we actually make the move up, right? Now, if we go up, then I'm looking at around the 700s or maybe 71 or 72 for potential reversal back down. Now, if we get the reversal, on top of that, we also get a pattern completion too, so that also confirms a shorting opportunity, okay? If that happens, then, we could see the market go down further to 69. Now, these patterns that I draw, it's not to say where the market's going to go or not, right? This is the reason why I'm showing you where it's going to go based on these patterns, because it's just through experience, really. Like looking at other indicators that I know that the market might go down here. It's not because of the pattern. The pattern helps though, but it doesn't. It's not the reason. What the pattern's supposed to do is it's supposed to tell you where is going to be a good entry point based on ratio numbers. Okay, Fibonacci ratio numbers. So. And that's what patterns are. They're psychological patterns, right? So they know how the markets move on a daily basis. So don't think that when I draw a line here, it's to say that it's because of this pattern. It's not at all, right? And you'll find that there are some cases where it goes completely opposite. But based on my knowledge of ebb and flows, clearly you got up move, down move, and then another up move, retracement, and then a bigger move, right? Which is what we expect. Followed by a retracement back down to break structure, and then which confirms a potential trend change, right? And then we're looking at a market to move up to either here or straight up to there, but not violate these highs here, right? If it is true that we're looking at a trend change, okay? And then from there you're looking at a reversal for the market to go back down. So it's a standard move, right? It's not because of the patterns. The patterns just give you more assurances to enter the market if it completes at a certain level. Okay. So that's that with the Aussie. So it's going to be kind of up and down next week, but just keep note that we might see a stronger Aussie dollar in the coming couple of months, I think. So that's that there. AUD USD, GBP AUD. I just want to talk about this one quickly. So yeah, again, when I used Aussie dollar and the pound Aussie together. So I always look for evidence in both for potential trading opportunities and strategies as well, because these two trade completely opposite to each other. So I thought I'd just tell you that. Now I just want to talk about oil and gold, and then that'll be it, and then we'll just call it a day from there. So oil had its reversal because I think OPEC announced they're going to cut production, which is good news for oil, right? Oil prices and oil traders. We've got a doji candle here, right? So this is a bullish pattern, right? So you got the bearish candle here, and you got the kind of like a doji pin bar kind of candle, and then you've got this big bullish engulfing candle. So what I expect to see next week is follow through, right? So this is a good sign, right? This is a good sign for oil traders. So we're looking at potentially another move up, initially up into this level here for initial resistance. So we'll definitely get a retracement, possibly. And then once we get that retracement, I think we're going to start to see a big move up in oil. Just something to note there. How far it will go, I don't know, right? Initially, I'd probably be looking at this level here being one of 33, 34. You can make a case for, say, 31 maybe as initial resistance levels. But ultimately, you've got to be careful in the oil market at the moment. I'm just not convinced just yet. I think there's going to be another bottom down around these low 20s. So this could just be another move up, and then we'll roll over. So just be careful with that. Last one, gold. Very important. So if you don't know already, gold just completely broke out. And initially I thought that we'll get the reversal around here, but it just kept going up. This is telling you something, right? Now, a lot of people don't know anything about this stuff, which is fine, but I'm kind of helping you by explaining this a bit. Try and do my best to explain this. But this is signaling something major, right? That the confidence in the currency markets, or confidence in the fiat currency, or the dollar, US dollar, or any of the currencies is being tested, right? We've been in a downtrend for the last 5 years or so, right? This is a market that's heavily manipulated, right? We came down and we were always looking at this level as potentially make or break levels. We could have just kept going down, or we could have kept going up, right? We've broken two minor resistance levels, right? In there and there. So what I think could happen is we could be looking at maybe the price action again, maybe going to test these around this region here. As of yesterday was the first day where we saw some bearish moves, right? So there will be a reversal. It's just a matter of whether the market would maybe want to push up a bit more. But this is telling you something, right? Something major is happening in the world economy, right? Silver market is the same as well. So what I'm trying to tell you is, I don't care what people think about gold. A lot of people think, oh, well, gold's just a piece of metal. It's useless. You can't do anything. I can't buy anything. It's not money. But gold, through thousands of years, is real money. It's the real. It's what has value, right? Not the stupid piece of paper that you've got in your wallet that you call money. That's not money. That's just a piece of paper that printed stuff on it, and that's it. And they gave it to you, and they were able to convince you that that's money. That's not money at all, right? So if you've got a lot of cash and all that stuff, like, at the moment cash is important because we're in kind of deflation. So yeah, obviously physical cash is important, but once deflation slows down, that's where they start to look at inflating the economy, right? That's where they start to print money, lower interest rates more, and all that kind of stuff, and then that's going to cause more problems. And that's why gold is reacting off that, right? Gold investors are seeing what's happening. Now, I've already put some numbers together in terms of where I think this market's going to go. And we're looking at potentially high moves, very high moves in the near future. When? I don't know, okay? Because, and again, if it was that easy, then everyone would be doing it, right? It's not easy. Just because it looks like it's going up doesn't mean that you can just set up an account and just roll with it, right? And just buy and hoping it's going to go up. Because you got to remember that these moves, even a small move can hurt you. Even a small move can throw you out and and your accounts are blown, right? It's not the stock market. It's not the stock market where it goes up 5 cents or half a cent or anything like that. And if it goes to zero, that's all. If you get in the wrong trade, right, and these are leverage products, right? So, say for $100 could essentially buy you 10,000 shares or 10,000 tons of gold, right? Paper gold. So if it goes up, say, 40 points, you might make $3,000, right? Sounds easy, but what if it goes down 3 points, right? You lose 3,000. What if it keeps going down, right? The thing is, once it keeps going down because they're leveraged, you can lose more than that 100,000 that you thought you borrowed, right? And your initial investment was $100. So you can be in a bigger loss than you intended to be because you didn't know what the hell was going on. You think that just simply setting up an account and just showing the market is going to work. It doesn't work like that, right? And that's why people lose money. Simple. And someone asked me, like, they didn't say it directly, but they said, well, what's in it for you doing this stuff? I do this stuff because I enjoy it, right? I just like it. I get a kick out of it, and and I've been through all these mistakes before, right? So I'm just kind of sharing with you what I see and what people do, right? There's no scam here. I don't make money from this stuff, right? I could, but I just don't have time to commit to getting it to a level where I can start making income from doing this, right? There's too much other things I need to do before I can focus on this. But understand that each time I do this, I'm wasting my own time. Like, this is my time out, right? The time that I could be using to do something else, right? Because I do this and I have to do the video, and then it takes me to a little bit of time to edit it and post it and all that sort of stuff, right? All this on top of everything else I do, right? So when I do this, I'm actually losing time. It's not actually, in terms of time, it's not benefiting me at all, right? But I do it because I enjoy it, and I like to help people. I like to share, my knowledge and what I know, and I've talked to a lot of people before, and I think I've got a pretty clear idea on what is going on, and I wouldn't just simply go on here and try to scam people. So you can never be right? So you're not always right. But if you've been following what I've been following, if you've actually been following, you'll notice that I've actually made a lot of calls on the dot. Problem is, even though I made those calls, I didn't take those calls as well. So also, I'm actually put myself in a position where I didn't take advantage of an opportunity, right? And all that, right? It comes down to minimize the stuff you have to do to focus on what you really have to do, which is make money. And when I do these videos, I lose that time, right? So even though I've done this, I've told you that there's a move here, I'll most likely miss it, So that's that there. But yeah, we're in a very testing period at the moment, and I don't think anyone realizes how bad this situation really is, right? So I'll leave it at that, and I'll speak to you soon. All the best, and any questions, let me know. All right, see you guys.